Are you trying to pay off your mortgage quicker and considering a 15-year fixed loan versus a 30-year fixed loan? Well, today we're going to go over the pros and cons of a 15-year fixed versus a 30-year fixed. Give you some things to think about and also some things to consider when actually talking to your mortgage broker if you're considering refinancing. But before we get into that, my name is Jeb Smith. I'm a real estate broker here in Southern California. If you're new to my channel, it's all about real estate, all about finance, trending topics that might affect you as a homeowner. So if that interests you at all, do me a favor and hit that subscribe button and give me a thumbs up if you like the content. So I actually come to you as a previous mortgage broker. I have over 10 years experience in the lending side, so I understand loans. And this is a question that I got a lot as a mortgage broker. Should I consider a 15-year fix? Should I consider a 30-year fix? What should I do? So today we're going to break it down a little bit because things have changed, right? Interest rates are really low now. And a lot of people are considering, getting that lower rate by going into a 15-year fixed loan. So let's talk about some of the pros of doing a 15-year loan, and then we'll get into the downsides of it. So one of the pros of a 15-year loan is that you actually get a lower interest rate, right? So versus a 30-year fixed loan, your rate on your 15-year fixed is typically going to be lower, quite a bit lower than that of a 30-year fixed. Another thing is you're actually going to pay less interest over the course of the loan. Now it's a shorter term, so it's 15 years, 180 months versus 360 months. So because it's a shorter term loan, you have less interest to pay over the course of the loan. So the loan isn't going to cost you as much by doing a 15-year fixed loan. Now, the downsides, right? The other pro would be that you pay off your home quicker if you stick to a 15-year fixed mortgage. And those are really the main pros to doing a 15-year fixed, right? You get a lower interest rate, you pay less interest over the course of the loan, and you pay off your loan quicker. Some of the downsides would be that because it's a shorter term loan versus a 30-year fixed loan, your monthly payment is actually going to be quite a bit higher than it would be on a 15-year fixed, right? So it's not going to be double, like just because it's 15 and you go to 30 doesn't mean you take your payment of say $2,000 a month and it becomes $4,000. Or $2,000 a month on a 30-year fix, it becomes $4,000 on a 15-year fix. That's not how it works, right? Because there's interest involved and there's an amortization schedule that has to be paid. But you can it's not exactly double, but it's pretty damn close to doubling your payment when you're considering a 30-year versus a 15-year fixed loan. And another thing to consider is not only is your monthly payment almost double what it is on a 30-year fixed payment, your mortgage payment every month is stuck at that amount, right? And not to say that it's not stuck at that amount with a 30-year fixed, but a 30-year fixed gives you a little bit of flexibility, especially if you're in a position where you can do a 15-year fixed mortgage. And what I mean by that is, oftentimes when I used to talk to borrowers about refinancing or purchasing a home in a 15-year versus a 30-year, we talked about goals and all of that good stuff. But one of the advantages, if you will, of doing a 30-year fixed mortgage is that your payment is lower versus that of a 15-year, right? Which we discussed. And so if you're in a position where you wanted to pay it like a 15-year loan, you could always make additional payments each month. You could get the amortization schedule from your lender, from your mortgage broker when you actually do the refinance and say, hey, if I wanted to cut this down to 15 years, what payment would I need to make each month? That mortgage broker should be able to provide you with a payment each month that if you made that payment, that it would essentially take your 30-year fixed loan and cut it down to a 15-year fixed loan. Well, but another advantage of doing it that way is that if something comes up like what we're experiencing right now with COVID and the pandemic and what have you, is that you're not actually stuck on that 15-year fixed payment schedule, right? So everybody that has a 15-year fixed currently has to pay that 15-year fixed payment every single month. Whereas the person that was on the 30-year fixed payment schedule could, if they were paying that 15-year payment schedule just because they wanted to, can now revert back to a 30-year and pay that lower monthly payment. So it gives you a little bit of flexibility. Yes, you're paying a potentially higher interest rate. Yes, you're paying more interest over the course of the loan, but you have the option to pay it down to a 15-year if you so choose. But if something comes up or you just change your mind and want to go to a 30-year, you can just pay the 30-year fixed payments without having to do a refinance. Now, what I told a lot of people is that, you can do it that way, or you could take that additional amount that you're going to pay, get a 30-year fixed loan, if you will, get the amortization to pay it down to a 15-year loan. Whatever that difference is in each month that you would have to add to your mortgage payment, maybe take that amount and invest it in something. Investing in something that has a potentially higher return, and then you could take that money, whether it's the stock market or maybe another property or whatever it is. Maybe it's just putting it in savings for a rainy day when something like this pops up. You have that savings account, and then if that account earns interest, earns money over the course of the loan or over the course of the period you have it invested, then you can take that money if you want it and pay down your loan balance if you want. But the key here is not getting stuck in a position of having a 15-year fixed mortgage payment if you absolutely aren't sure that that's the direction you want to go. Because what I will tell you is that in my experience in history, most people only keep their loans somewhere between like 5 and 7 years. And with the case of, rates going lower and lower and lower, almost, every 3 to 4 months over the past, say, year and a half, people have refinanced multiple times. So, it makes no sense if you're going to continue refinancing, taking that higher payment up front. Why not take the lower payment, use that additional money you were going to use to pay down the principal and invest it in something else? Especially because if you're not going to pay off your loan, there's no sense in going into a smaller term loan or a 15-year in this case. So, and in talking to your mortgage broker, if they can't address questions other than the fact of what the interest rate and the monthly payment are, they can't explain the benefits, the pros and cons of doing one versus the other, or breaking down the amortization schedule, or giving you an idea of if you pay one extra payment per year, what that takes off your mortgage. Just so you know, it breaks down your mortgage from a 30-year fixed. If you're on a 30-year and you make one additional payment per year, whether it's just one payment at one time or you do bi-weekly payments or whatever it is you decide to do, it takes your loan from 30 years down to just over 26 years. And then if you made 2 additional payments each year, it takes down to like 22 years. So there's a way to take the 30-year fixed payment and still pay down your loan quicker. But with that said, there's a lot of clickbait on the internet, how to pay off your mortgage in 5 years, how to pay off your mortgage in 7 years, or whatever it is. What it boils down to is just putting additional money down each month or each year or whatever it is towards the loan so that you pay off that interest quicker. There's no, hack, there's no pay it off quicker without actually paying more money towards that loan, just so you know. But anyway, find a mortgage broker that can answer those questions for you. And if you have additional questions for me, do me a favor, comment below, reach out to me directly. My contact information's in the description below. But as always, I appreciate you taking the time to watch. I appreciate your support, and we'll see you again soon. Have an awesome day. Bye-bye.